Yo, what's good, guys? What is happening? I have been told to say ho, 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 but I think I'll just stick with the yo. I might even do the ho, ho, ho. But anyway, what's good, guys? I hope everyone is doing very well. Okay, so today's video, should I say, is going to be about Bitcoin and how to trade it. Because that's really what the question is, you know? How can you trade Bitcoin? What things do we need to look for when we are trading Bitcoin? Now, the reason why I talk about Bitcoin is firstly, it's the largest coin that is being traded across the board. All right. Everyone makes moves based on Bitcoin. Everyone will buy cryptocurrency because of Bitcoin, and it's in the media. Everything is all about Bitcoin. All right. The problem is it's subject to crazy behavior. All right, because you can imagine if millions and millions of people are actively trading Bitcoin, we are going to get millions of variations of people's opinions and thoughts and projections, patterns, you name it. They're all going to be reflected in the chart. But unfortunately, ladies and gentlemen, if that was true, then this game, all the retail traders would be able to join together and try and move the market. Well, unfortunately, they can't, because it's what the market maker wants. And if you are still of the understanding that the market maker doesn't exist, do your homework. Go and research what the market maker is. I've been in the game nearly 12 years in January, and I'm very familiar with the market maker's behavior. All right? And the purpose of this channel is to help you come to the understanding that this is not a free market. Okay? We are in a business model, and this is a practice to take money from one pocket to the next by providing money to induce traders to believe one thing is happening when really something else is happening behind the scenes. And if that is not your kind of forte, where you don't believe that that's possible, please go and do some work on market makers. It's there. They can't hide from the fact that they are in charge of this, and the sheer conspiracy behind it on whether or not they actually exist or whether they have a role in the marketplace itself. That just leaves you in a, how can I put it to you? You're on this tightrope, okay, as to whether or not you should believe it or not, but you're too engrossed in the idea of trying to make money to even pay attention to it. All right. See, that's the thing about trading, ladies and gentlemen. It's an unknown realm. We won't know what happens next, but only if we understand the way they operate, we are going to improve the chances of a trade playing out by making sure that we trade at the right time. All right? That would be Tuesday, Wednesday, and Thursdays. Why are those days important? Because Tuesday, Wednesday, and Thursdays are the chunk of the week. All right. Monday, they set up their intention. Friday, they're preparing for the next week's move. OK, so you can see one of two things happen. They're either going to make a run for profit or they're just going to hold price. All right. Tuesday, Wednesday, Thursdays are the best days to trade, especially in Forex. All right. Everything is moving, and that's where your money should be made. If you're not making money on Tuesday, Wednesday, and Thursday, do not try it on the weekends. Because the weekends, you can see what happened over the weekend, ladies and gentlemen. Bitcoin was just doing crazy stuff. It wasn't going anywhere most of the time. And most of the people in the Discord were just talking about why nothing happening. People forcing trades, people trying to get something. Don't put yourself in that situation, ladies and gentlemen. The whole point of this system is to help you realize high probability trades and scrap all those marginal trades where you just think that you can make a quick buck. Avoid it. So, the purpose of today's video, ladies and gentlemen, is to just bring you into a little bit of an understanding on how I'm able to just view price and establish a projection. You see, I don't predict, I project. Now, a projection is a calculated estimation, guesstimation for the better word. All right? Because I can only go by what I see, and I can only use what they've done to help me understand the nature of their behavior at the next zone. That's all I can go by. I'm not going to come with no wizardry and be like, Bitcoin is going to hit 41,362, okay? And that is the basis of it all, because I've been in cryptocurrency since 2007 and I know the cycles when only in 2021 the combined volume and trading activity of cryptocurrency subsides and dwarfs all of the years combined previously, and it's all happened in 1 year. That's what I'm saying to you. Forget whoever's been involved in cryptocurrency from day one. Irrelevant. Because back then, it was no one's land. It was only those who were involved in crypto. Fair game. Now that the money's here, now is important. This is when you become aware of Bitcoin, because there's money now behind it. All right? Some people will challenge what I'm saying. You know what? I don't care. I'm a trader. I don't care about price. I don't care about the long-term play of Bitcoin. I have no interest. All I care about are two things: momentum and how much of that momentum is going to pay me. That's all I care about. Bitcoin could be 0.001. It could be cheaper than Shiba. I wouldn't care. Yeah? Just look at Shiba. Look at where does the price play any role in affecting my trading decision other than what they do at a certain point? Are they building shorts or are they building longs? That's the only time I make reference to price. Bitcoin could be 0.0003. But look at the chart. Are you saying that Bitcoin has never done these sort of plays before? You've never seen a stop hunt in Bitcoin? No, it's all going to be the same. It's just a different asset with a different bit of interest, and people are prepared to pay more for it. That's all Bitcoin is. All right? So, what's the purpose of this video? Again, it's to help you understand how I'm able to read into price and project where I think it's likely to go based on the development of momentum, development of the way they are holding price at a particular point. So what we're going to do is we're going to jump back in time a little bit, all right? Because it's important to understand what they have done in order to understand what they're likely to do next, all right? So I'm going to pull up this image right here, all right? And I've got a few more images that I have spoken about before, but it's just to help you understand my thinking process behind it. So this was during the 15th and the 16th, 17th. That's when that was happening right there, which was this zone right here, okay? Now, understanding the way price action works, or should I say understanding the market maker's business model, when this play was happening, the first thing that I was saying during this time was to everyone in the streams, be mindful. This is a fast move. Do not trust the fact that they're coming away from the zone at speed. You need to be very cautious with this sort of play. The slow trend is the true trend, ladies and gentlemen. For every attempt by the market maker to move price higher, okay, it always follows with a move to the downside. Now, I've been watching these sort of plays happening for a long time in Forex and in crypto since we first started. I'm starting to see the behavior over and over again. Now, if you look at this right here, this is the same zone. Now, I provided these projections to the Patreons during the masterclasses to help them understand my thinking, my thought process behind why I believe price is going to go one direction against the next based on the way they are behaving. And you can see that we've got the M formation up here. We've had the big move to the upside. All right. I automatically was aware that they were getting ready to fake out all the traders. This is what we would call the Super Mario bull trap. Okay. They trapped the retail trader. All right, if we go back into the chart itself, you can see that it was at this point right here where they were probably drawing this madness, drawing it from here. And then they were saying, okay, this is what we're waiting for. We're waiting for this bull flag. This is the flag that's going to send it up Bitcoin to the upside. Hold on a second, ladies and gentlemen. We cannot do this without the castle. There we go. That's the Super Mario play. And a lot of traders were making this pattern. They were drawing it off and waiting for price to break out. And guess what? It did break out, ladies and gentlemen, but it came back in again. Because they know that there are traders that are setting pools of liquidity in this range, getting ready to try and exploit the range. Okay? Look at what they've done. They came back towards the previous wick right here. All right? Now, at this point in the image, when I had drawn the actual projective zone, it's the projected zone itself, all right? I said to myself, hold on a second. we need to understand now, this is on the 15-minute time frame, guys. All right, let me drop onto the 1 hour just so I can put things into perspective for you. Here we go. We need to understand what was going on in this range to really work out as to why it was going to come back down. All right. Now, I had the projected zone at the 45,738. Okay. Now, there was at 47,552 when I had done the projection. All right. And then we waited for it to go down to the 45,738. It came all the way down, 45,738. And it actually, it came down to that point in this next vector candle, and it came down a little bit lower before it returned back up. But what was the reasoning for this? Bitcoin seems to have this habit of going back to the wicks because it's giving me the understanding that the market maker, by moving price aggressively to the upside, he was favoring lower prices, because if he's moving at speed to the upside, all right, and not going anywhere, it means that he's setting up shorts so that he can move price down lower and get the maximum return based on the most amount of liquidity that he's trapped in these zones. Remember, when someone places a trade, they put up margin so that they can actively be involved in the trade. That margin is what we call the dead money. It's the dead liquidity to the market maker. To you guys, it's your capital. But to the market maker, it's dead money. In other words, it's money for them to go for the taking. That's where their money's at. That's why they love leverage trading. That's why they pay attention to open interest. All right? That's why people are paying particular attention to funding rates and how they're designed to keep traders in. Looking at the way they were behaving, you can see that we had this general pattern of price moving up higher and then dropping. Go back into the chart itself and you see it bright as day. Look. We started off with this move. From this move to the downside, we saw that they were trying to trap traders by marking off these key zones right here. And it was at this point, ladies and gentlemen, where most of the people, and be honest with yourselves, there were a few people in the channel that were doubting the hybrid, saying, Tino, it's not going to go down. Look at the big vector candles. They are favoring higher prices. They're getting ready to move higher because they're on their way already to recover the vector candle. Well, look, guys, they came back and recovered the vector candle. And because there was no follow through, what happens whenever they hit a previous vector point? They always pull it back. Okay? So if you go back in the streams and watch anything from the 6th to the 7th and going into the actual 9th, watch those streams over those 3 days, you'll understand what I was saying at that point. I was expecting them to come down, and I stayed true to my conviction because I understood that these big pushes to the upside were not the pushes that price was getting ready to come out and move higher. It was designed to trap the liquidity. Remember, ask yourself, why is price moving higher but not going anywhere? Look at this big push to the upside and it doesn't achieve anything. And look at the speed of it that it's happening at. It's going fast, moving too fast, if anything. Okay? These were the clues that were giving me the reason to believe that the market makers were preparing to drop lower. And every time they moved up to the upside, they were preparing to go back down lower again. Okay? So going back to the Super Mario flag. Now, this pattern, guys, it's being traded across the board. People are referring to it. They are basing their predictions on Bitcoin, and they believe that this is going to play out. Look at how it's designed to trap the retail trader. You'll see it work sometimes and you see it not work sometimes, but the principle is it's a trapping mechanism. The damage would have been done when price breaks out, commits the liquidity, and then they pull it straight back. The red vector candle should be enough information for you to understand that this pattern is flawed. By nature, it is designed to make you believe that it's going to play out because it's a bull flag. It's bullsh. You know what I'm saying? Yeah? These are mechanisms that make retail traders believe that all you got to do is just draw this flag. I'll say it to you, and I said it to you in the last video. Guys, it doesn't make sense. The business model cannot be exploited on this silly play. Now, there are probably people out there that say, yo, man, what are you talking about? I made a killing off this pattern, blah, blah. Fair enough to you, bro. Okay? Your day will come. You'll defend it. But you know how many times people get faked out from this. So this is what I'm trying to get to you, guys. When you're pulling up the chart, have a clear understanding of what you think the market maker's trying to tell you. Do not base any decision on what people are saying about it. All right? Don't even go and buy anything that I'm saying. Now, what I'm trying to deliver here, ladies and gentlemen, is to help you understand how I'm able to use the hybrid system. I'm giving you an opinion of a strategy. Then the key things that it provides to you. Just look. Spikes to the high are appearing more often than spikes to the low. What's it doing? They're hitting the orders. Look, this is where someone went long, someone went long, someone went long, 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 long. How often do I need to say it? They're going long, but price isn't going anywhere. They are containing the retail traders' commitment. They're making them keep the money in this zone so that when it's time to release the liquidity, they move out of the zone at speed. And then they throw off the retail trader, make him say, oh, God, what am I going to do next? And then they bring it back up and install the idea that they can keep hold of their trade, add more margin because they've made them believe that price now has hit the lowest point it can and it's come all the way back up. Retail traders committed his liquidity, and then before you know it, they've made the bleed to the downside. Wherever you have key zones in the chart where last week's low is present or yesterday's low is present and it's nearby, they are potentially getting ready to send price into that zone because it's at that point that they initiated interest in the first place. Remember, at this point right here, the market maker had trapped a lot of retail traders to go short. At this point here, he did the same. And at this point here, he did the same. Notice how last week's low, yesterday's low, at this point in time, were the areas that I was expecting price to reach out to. So once it hits that zone, they would then move down lower to induce more traders to step in, which would be the range daily low at the actual lowest point in the range where they're going to trigger interest from the retail trader. And before you know it, that's exactly what they had done. They had came and moved price all the way back down. All right? There are things that we pay attention to. And this is where the hybrid system comes into play. This is where you understand it a little bit more. Another play. You've seen that one. Let me give you another zone. This was at the 54 mark. All right? This was when we were talking about Bitcoin up at 54,000. So let's go back to the 29th of December. No. Yeah, 29th of November. Look at that. Look at that for a projection, ladies and gentlemen. Now, we expected price to come down, but boy, did we expect it to break down? Nah. I was content. Remember, always pay yourself. So I sent this over to the guys and I said to them, look, 1, 2, 3 hits to the high. They're going higher, but they're not breaking above the range. Something's going on. I'm getting the understanding that the market maker is preparing to drop price. My projection was to see price to come all the way down towards at least the 53,800 zone. And I was expecting them to recover this wick. And then if it was going to do that, it was going to come back down and hit this liquidity zone. So we were on the right side of the trade. People were getting ready to go long. But we were on the right side of the trade, ladies and gentlemen. And look what happened. Price collapsed. There's that wick. They came back down and hit the zone. 53,000, actually it was less than that. Yeah, 53,200 was that wick. Came all the way down here, projection zone, psychological low right there. Even lower. Last week's low. Okay? What was going on? Again, the same story that was happening over here. Hitting the highs but not going anywhere. Trapping the retail trader. Wick 1, wick 2, wick 3, wick 4, wick 5. It's all there. Highs, 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 highs. Okay? There are more impressionable moves to the upside than there were to the downside. In order for them to get price to the downside, they have to move it higher to trap the liquidity by the retail trader who believes it's going to go higher. Moon Boys paid the price. And I was saying to you guys at that time in the streams, the 29th to the 3rd of December, 29th of November to the 3rd, go watch those streams, ladies and gentlemen. The signs were there. They are moving higher but not going anywhere. The 800 EMA, until price breaks above the 800 EMA and closes with conviction, we're not looking for anything other than shorts. And this is where it comes. This is where the hybrid system comes into the play. This is understanding the psychology of the way price moves. And that's what I'm trying to get across to you guys. And I talk about this in the streams all the time. The clues are there. I can't tell you when to enter. I can't tell you when to exit. Okay? I need you guys to understand. I'm providing you with a means to help you understand how to use this strategy. And I won't stop. If the way I speak is a little bit forward, if my tone is a little bit expressive, it's because I am very passionate about this game. I've been in it too long. I've suffered the losses, okay? I struggled to pay myself when I should have paid myself. And that was a journey and a half for me. I'm just trying to tell you guys that you can overcome all of that chaos if you just listen to what I'm saying in the streams. Try and understand it. Now, most of you are new. I get it. You're new to trading, let alone crypto. Don't put too much pressure on yourself to believe that you have to get this in an instance. No, you don't. All you've got to be mindful of is just the way the pattern, the way the market maker behaves. That's all you're looking for. You are studying, ladies and gentlemen, mass psychology. And this is a graphical representation of that. Remember, the market maker, okay? The candlesticks are the result of his intentions. They are the result of people being happy, being sad, being fearful, being euphoric. And our goal is to try and understand the best way to really exploit this. Just looking at this play right here, Bitcoin makes a move to the upside. We understand it's a fake and false move. Okay? They come up to the range. They come and recover all of the moving averages. They brought things back into the fray. And when I say the fray, it means it regulate price. It means there's a mean reversion. It means there's a reset in the direction of where price has come from and where it's ended up. So that means they're going to start building positions again. Look, up, down, up, down, up, down, up, down. For every spike to the downside they hit, they came back and recovered it with the candlestick. I hope this video does put things into perspective for you, ladies and gentlemen. Go through the previous streams, guys. That's all I'm asking you to do. Because it's there. You're going to have an understanding because the whole point of this strategy is to train your eyes to observe as many variations as possible of the way they move price. Just look at how they moved price from this zone down to here. Okay? Just look at how they did it. From this point right here. Okay? Pay attention to the behavior here. Look at how they did it here. Look at the false move. Drop. Did this on the Monday. Came down. Look at this. Fake play. Dropped it down. This image right here. Coming from the 8th of December. Projecting the drop to price to the downside. Expecting the recovery of the wick. What were the reasons? They recovered this green vector candle right here. They had this blue vector zone. We had this wick. We had some more liquidity in this range right here with the green and blue vector candles, which these lines again take the half point of a vector and the open of a vector candle. And look at where we are right now. We're now at the 45,932 zone. We're down here now. Yeah? Coming into next year, ladies and gentlemen, we're going to do this all the time. But what I'm saying to you, use the Christmas period to just go over your strategy. Whether you use the hybrid system or not, take one aspect of the hybrid, okay? Apply it elsewhere. See what you can do. Work with what's comfortable for you. This game is all about your ability to understand your behavior when you're trying to understand everyone else's. And you only become intuitively connected to the way price moves if you're focusing more on what the market maker is trying to make the retail trader think, because ultimately it's what he's trying to make you think. And the way you distort your thinking is if you start trading with too much leverage, you're risking too much money, and your focus is more on making sure that your leverage or your liquidation point isn't hit, as opposed to paying attention to the trickery of the market maker. Have yourselves a wonderful day, ladies and gentlemen. Take care of yourselves. Peace.